Good morning, ladies and gentlemen. Happy New Year and glad to have you back on the channel. Today's video is going to be about the different trading styles that you can take in order to incorporate in your trading. Um, there is no right or wrong in regards to this. It's just a matter of preference and time in reality. As you can see, we have a long trade right now on Euro USD. It was taken roughly about 6 minutes ago. The trade was taken based on the two indicators that we discussed, the Bollinger right here and the RSI right here. So expectation, give or take, on this trade, I'm okay to take somewhere about 50 to 70 bucks. I'm okay to take it off and take the trade in a profit. Usually, a lot of the times, you don't take the profit and you assume that the market is going to continue going in your direction, and then you close it into a loss, which is absolutely crazy. It has happened to me previously, but yeah, we'll keep an eye out on it while we're going through these options. So different kind of traders. Um, there are there is a distinction between trading and investing, first of all. Okay, investing is you can take a chunk of money and let's say invest it in stock X or in commodity X, let's say gold, for example. Of course, it's not financial advice, or a cryptocurrency like Bitcoin or Ether. You invest a sum there and you just leave it for a predetermined period of time, whether you want to do it for a year, for 6 months, 3 years, 5 years, even up to 5, 10 years. This is just investing. There's short-term investing and long-term investing. Okay. When it comes to trading, which is what I'm more involved in, of course, I do have investments that I leave the funds in and wait for the right moment to try to potentially reap the rewards. But what I appreciate in the concept of trading is that you always have the option and the volatility to try to make some money. As you can see here, we didn't take the 20 bucks, but we're in a slight minus. But this doesn't really matter, as we're trying to wait for the next candle to see how the market would start to move. So different kind of traders. We have day traders, okay, that find in the market daily trades, usually trading on assets that have had a huge move in the previous day or two, okay, and that's called day trading. You go into the position and out of the position in the same day. So let's say you take a long or a short on any position, you tend to try to target the movement of that specific day at all. Okay, it's not that you're looking to extend that period to any other days. Of course, if it does, it's okay, but you're looking to target the daily movement in the market, in and out of the market, same day. That's why day trading is one of the most popular trading methods because it can give you huge, uh, huge rewards potentially if you know what you're doing, but at the same time, it can give you pretty big losses as well if you don't. Even if you know what you're doing, you can incur pretty big losses depending on the way the market goes that day as well. The next option after that would go into swing trading. Swing trading does not necessarily limit you to trade in a single day. You're able to hold the positions for more than a day and to swing the trades. It can be one day, it can be 3 days, it can be 1 week. It really depends on the momentum and the potential movement you're expecting in the specific asset. So if there is any fundamental news coming on that asset, or there is a halving, or there is going to be a speech about that specific asset or sector, then you can try to swing the trade and trade on that. You can even have short-term swing trades. It does not limit you to a specific amount. It's just that you're trying to trade based on the trend itself. Okay? And that usually can last more than one day. The next option would be a scalper. A scalper is a trader that goes into the positions. So let's say we're on Euro USD, it would go down to time frames like 5 and We are talking about minute positions that he can take. So for example, he or she, of course. For example, on a scalper, we could see a position here, a position here, a position here. Okay, if it was deemed necessary for him to take that position and he thought that it's possible to make profits. Swing trades would more probably be somewhere like one trade here, maybe out of the trade here, back into the trade here, and so on and so forth. Day trading is from the moment this candle right here opens, right here, which is right about here. Everything from, sorry about that. Let's zoom out a bit. So everything roughly from here, where the market opened, can be traded. We can see also right now that we are on 19400 right there. Usually you want to keep an eye out on levels like this when you're trading. I my preferred trading style usually is a combination of swing and scalp, really depending on the day. Sometimes I like to simply go in and out of the market to simply take a small profit on the trade. Um, let's give it a minute here. And there is no right or wrong. It really depends on the trading style that is best suited for you. Now, for each trading style, there are different rules that must apply. Okay, so if you're trying to be a scalper, if you're trying to go in and out of the position right here, so I took a lot in. Okay, it's been roughly 40 seconds on the trade. If you're trying to scalp the market, you're not expecting huge profits on every single trade. The size is relatively decent. If this candle in the next minute does not go a bit higher, in which I can close the position into a profit, I'll just close this position into a slight loss. Okay, this is the position that we just took right now. It was to show you the concept of how scalping works. Okay, so there are different rules that apply to each trading style. Of course, you can find information over Investopedia if you just go to Google and you even write, for example, sorry about that. If you even write, for example, um, different types of trading styles, you can see that all the information necessary is right there. Position trading, trend breaking, scalping, breakout trading, fundamental trading based on the news, range trading, reversal based on the movement that's against the news. You can see trade driven by events, fundamental trader, trade driven by events, similarities there. Technical trader is what we've been doing over the past. See, so the position went against us. Now it would be a clever time to get rid of the trade if you were a scalper. If you're not a scalper and you're looking at the position right now, you say, "Well, I was holding it. It was in a bit of a minus. Now it's in a larger minus. Why don't I hold it a little bit more?" Sometimes, if your conviction and your analysis is right, then the market might come in your direction and you might benefit from that movement. If it was on the edge, like it was on this buy signal right here, we just took it for the sake of showing how it is. It really can go in both directions. So I just wanted to generally speak about some different trading styles. I would suggest to try to test some out to see what is the best for you. And once you find the trading style that is fun for you to do, it's relatively okay in your schedule and you can manage with it, then from that point, the next step would be to try to create a set of rules in order to apply to that style and to take it forward from there. I hope this was a helpful video, and I will see you on the next one. Take care. Bye bye.